Welcome to Breaking Banks.
What is small and what is big? And no, I'm not reading from Dr. Seuss from my girl's bookshelf, but it's really curious. Why do we draw lines and silos in the banking world around small business? Small businesses generate 44% of U.S. economic activity, yet are often misunderstood and ping-ponged between the consumer and commercial parts of the bank. This week, Derik Sutton, Vice President of Product and Experience at Autobooks, and Allison Netzer, Chief Marketing and Strategy Officer at Nymbus, and I talk about the SMB Ping Pong Challenge. Small business has been just thrown into the limelight through PPP in the last year. But the reality is small business is not only the lifeblood of the US economy and a global economy, it is for many banks, and particularly the community and regional banks, the lifeblood of what, who and what they serve and how they approach the market. But at the same time, for as important as small businesses are, there's a lot of misunderstanding and maybe not enough depth of, where they shouldn't. Derik, why don't we start with you? Because Autobooks was really built around the small business from the start. How do you even begin to think about it as a category? Because I think most of the banks and even the startups we talk to, we throw out small business or SMB and everyone nods their head and says like, oh yeah, I know exactly what you're talking about. But do we really, is that just lazy?
Yeah, when we first got into working with financial institutions on small business, a lot of what we had to do early on and still continue to do is we actually believe we're trying to help create or define the category because it's so broad. And so right now, financial institutions, to a person, they'll give you a different definition of what small business banking is. And, they'll give you maybe a different niche or specific use cases where their financial institution is finding a lot of success. And that therefore kind of defines small business banking for them, small businesses in general. So yeah, I think the industry has a lot of maturing to do when it comes to clear definitions. And I think small business is probably too broad of a term, quite frankly. I think we need to work on terms that are maybe a little bit more market segmented.
So Allison, you also sell into that this is a segment, and as Derik said, it probably should be multiple segments. How do you start to slice and dice and even make sense? Because I always find it weird that if you define it based on its potential lending capacity, that seems like a very bankery way to do it, but actually isn't so actionable.
No, I agree completely. I think the labeling of the category, I would agree with Derik. I think small business is too broad. It's just like using the word banking. Like, what is that?
Yeah.
What does that mean? And so I think terms are important, right? When you say small banking, I think one of the big misconceptions or small business banking is not every business wants to be small, and so you kind of ask how do you see them? How do you segment them? And I know this is big at Autobooks as well. It's what are the outcomes they're trying to achieve? And if you segment them by their loan capacity, you're going to miss the boat, or you are missing the boat, right? Which is they started this business to grow. And if you don't see them through a growth lens, if your language doesn't reflect that, if your products don't reflect that, then you've missed the boat entirely. It's not a product set. It's not even a customer set, right? These are consumers. They're consumers of lots of things. And you need to sort of address them as such, both in the language you use, where it is in the institution. That's what, when you talk about, people nodding their heads, the first question to ask is, where does SMB reside in your FI? And has that been the same for the last 5 years? Because you're not going to get momentum. You're not going to get the political power to drive change within the FI if you're ping-ponging it back and forth between retail and commercial every couple of years.
Well, and that does seem like it alternates between its commercial minus and consumer plus, right?
Right.
And if you had to pick a side of the fence, which should a bank begin to side on?
Fair question. I would say consumer plus. That's just a personal bias of mine, but I also go back to these business owners are consumers as well, right? And if they were a pie, the majority of their life would be as a consumer. And so I think I would, if you couldn't do a third category, I would do consumer plus.
Yeah, I would actually. So I would. to me, it's very, I have a hard time articulating some of this. It should just be business banking.
Yep.
And you should build solution sets that attract different types of businesses to them. And I almost find it a bit, I don't know if offensive is the right word, but I just find it really, it's like basically marketing is one. We're telling all these people you're small businesses. But when you like my mom and dad own small businesses, but it was big to them. It was big to our family. It was 100% of their income. Why do we have to call people small businesses? I mean, they're doing something major in their own lives. They are contributing to their local economies. They're paying, in Allison, our last conversation, not only themselves, but oftentimes their business creates economic opportunity for another business owner. And so I think small business is something like we've kind of done it as a marketing term, as an industry term. We've passed it down to people. They've ended up picking up and adopting it almost as like this kind of banner that they wear. We've got Small Business Month and all this stuff, but like, why can't it just be more business banking? Here's solutions. You may happen to do $5 million a year in annual revenue. You may do $500,000 a year. You may do 50 million, but you may need the same tool, right? You may need a way to get paid online, as an example.
Well, and they approach it from a different place. We were doing a deep dive with a group of the Alloy Labs banks around, what in a return to never normal again, these SMBs and these new relationships, since community banks really, came to the table for these as the lender of last resort to keep a lot of the smaller businesses alive. And it was actually our CFO made the comment that no one starts a small business because they secretly want to be a finance professional, right? The last thing my landscaper wants, who runs, frankly, a mini empire, I know, up and down, our street, and he and I were talking about is banking. I know, weird thing to talk about with your landscaper, that, he doesn't feel loved and understood by his bank.
Yeah, I could see that. And I think that's why what Allison team are doing at Nymbus is pretty provocative, not even provocative, but the right thing to do. And I think that's why these niche vertical solutions are kind of winning out in many cases, is because they're speaking to a landscaper, understanding their needs implicitly, and then just embedding, banking tools or financial tools into the workflow. And that just resonates more, with your landscape mafia person there, Jason.
Allison, why don't you break down like the Nymbus approach and how you guys have reoriented the strategy around, the micro consumer sets is super interesting. Can you, go into a little more depth about how you guys are approaching the market now?
Sure. Well, I think Derik described it perfectly. So, if Autobooks doesn't work out, maybe he can jump over to Nymbus. But it is about conversation at the risk of oversimplifying it. So we start with what is the hook, right? What is that whether it's that pain point, that challenge that your landscaper is feeling that can be addressed. And sometimes it's addressed with technology, sometimes it's addressed simply with just good marketing. But at the end of the day, it's about adopting a common language, which is the business's language. And if you don't know it, ask. It's seeing, like we talked about, their business through a growth lens. And then thinking broadly, seeing the business owner as a multifaceted consumer. So quick example, we developed a bank concept for 18-wheeler drivers. And I spent 9 hours at a Love's truck stop on the way to Houston at talking to the people at the restaurant, talking to the truckers. That doesn't make me an expert, but it does make me interested. And it does make me have a sense of where they get their information from, how they like to speak. And it just builds, I know we all use the word empathy a lot nowadays, but I really saw that this is a challenge. It's not that they need a better banking product. They need some understanding. They cross state lines. They have incredibly difficult tax situations, which to your point is not why they got certified to be a CDL driver. And so having that surprise at the end of the year put at least half of the gentlemen I spoke to in a real stressful situation because they did not know that they would have that issue. So that's literally what our concept addresses, is the tax situation of 18-wheeler drivers. Pretty narrow, but there are 485,000 people that had tax issues that were 18-wheeler or contract 18-wheeler drivers last year.
Wow. Hey,
That's
I
a
want to
big
ask you
enough
a question.
market. Go
Yeah,
ahead, Derek.
that's huge. I want to ask you about language, Allison, because I'm a fan of that. So what I commonly try to convey to financial institutions is your marketing pages and really what you're trying to communicate out to your business owners are really account analysis routines thrown up on a website and try to put some marketing language around it. You're
Mm-hmm.
basically saying, here's how we're going to service charge your account. Here's the transactional fees we're going to charge you. Here's the way to maybe get some of those fees waived, and here's all of our fees for wires, ACH, whatever. And so for a industry that really, especially now, like I'm kind of talking to community bankers here, for an industry that prides itself on personal service, we really talk in a lot of transactions. We're trying to create transactional relationships with business owners. That's the antithesis of what you say if somebody comes into the branch and the way that you interact with them in person. So there's a disconnect there. So how
Yeah.
does that, so understanding what the trucker needs in your use case, how do you take that and use that language you receive to them to actually create a better inviting marketing experience for that business owner?
Yeah, no, absolutely. And an example of the language issue that you've used before that I love is the positive pay piece, and how we call it positive pay, as as if someone's going to get what that is. But with the 18-wheeler drivers, because the tax issue kept coming up, we kept that thread going. Like, what is the outcome that you're wanting? And it was, I just need to be able to set aside some cash for that bill, and if I don't do it now, I'm not going to do it on my own. So this is not the mind-blowing feature functionality that we came up with. It's just your standard roundup feature. And the way we articulated it is round up and put that towards your tax fund. And if you want to contribute more, we'll tell you how much more you should based on national estimates. But we're going to help you get there doing the work that you already do, because they said I can't change my routes to do different things. I can't, these are the things I can't do. And so the language was very simple. Save now for tax day. That's it. That's the headline. And that's the language that we use. And we do not get into any of the gory details that you mentioned.
Yeah, and the reason I love that right there, what you just said, that's what I was talking about earlier. It should just be business banking. And you found a need from a business owner, these truckers, and you said, it's Roundup Savings. That's a tool that's already in place in the bank today. Mm-hmm. And most people didn't think that's a business tool. They thought that was a consumer tool. Mm-hmm. No, that's the wrong mindset. Like, you built this capability, leverage it where it's needed. If the customer needs it, regardless of segment, we need to enable those type of features for the outcome that they're looking for, not because they're in a market segment that we put them into a core analysis routine.
Yeah. Well, in building on that, when you look at the level of innovation that has happened in the direct to consumer sort of fintech, and the tools and the features, the ability to get paid 2 days early, or to control spend, to map spend, to turn cards on and off, we just haven't seen that same level of focus within this segment of business banking. And I don't even think we see it, maybe not in the same sexy fashion, and kind of call it the corporate banking, right? The large enterprise piece. There's been integration into ERPs and that, but that's really kind of the realm of custom build. But in this prosumer segment, why haven't we seen more innovation? Or is it out there and it just isn't bubbling to the surface yet?
I think it's mostly due to fraud. Or the perception of fraud. And so for one, it's just even hard to start a business relationship with a financial institution. Financial institutions will joke around and talk about how, we basically want, an ounce of blood and, your firstborn to open up a business account. And you better prove that's actually your firstborn, because if you don't, we're definitely not going to let you in. And so I think, Jason, when you start with that as the entry point, good luck doing the other things that are taking place in consumer banking that are racing ahead. And so I think that the technology is there to do things more provocative for business owners, i.e., we're implementing a solution now where when a business owner gets paid, we can push that credit directly to their account in real time. And businesses are over the moon about that. And we're going to charge a small fee for them to be able to do it. And it's ironic. We take that to many financial institutions are like, you're going to charge a fee to do that? And, the thing is, I'm like, aren't you guys like really good at charging fees? Like, what's the problem here? The business owner finds a lot of value in it. We just need to do it. But they ask, an inordinate amount of questions about fraud and liability and things like that. And not really focus on the outcome that the business owner is looking for, of like, I want the money in my account now because I need to head to the supply house. Because if I pay 1% on that transaction, I can save 5% on my supply costs if I pay in cash versus deferring that expense.
Well, I think this is one of the key elements to pull on is we get hung up on as if banks and the financial institution are the center of the universe, but it's not about the money. The money's doing something for the small business owner. And the same is true for the consumer. It's just the small business is doing it with a lot more complexity and moving parts related to it. It isn't about being able to get a loan. It's about funding growth, and it's not about getting early access to cash. It's about being able to pay employees and not worry about payroll bouncing. It's not about where is this unsecured line of credit going? It's like, no, that creates additional capacity for me to be able to pay for my kids' college tuition, because my business and my personal life, to Allison's point, in some sense, if as a small business owner begin to blur, right? Like I borrow from one to pay the other all the time.
Right. And I think the other barrier kind of, Derik described, there's external kind of friction in terms of just signing up for the account. And then how do you unlock the prosumer consumer tools within the bank that they already have that would be valuable to the business owner? So you've got external friction, and then you've got internal friction. I think some of that comes back to where does your business banking practice reside in having the political power, to be able to bring things over from one roadmap to another. But it also comes back to the growth lens. Like Derik mentioned, you can charge fees. Like having a strong business banking practice is not altruism. You can make money as a bank on this if you see it as a growth lens. You can charge 1% because they'll pay it because they can make 5%, like Derik said. So I think it's going back to the naming and kind of the stock imagery of coffee shops and the struggle. Like it is a struggle, but no one's waiting for a bank to save them. They're waiting for someone to partner and help them. And so we just got to get out of this mindset that they're mom and pop struggling coffee shop that doesn't know how to spell loan. These are smart, intelligent, calculated risk takers that banks should, quite frankly, be honored to partner with.
Yeah, and I think a group that's doing this well, to their credit, is Square, and they're understanding the outcomes of business owners. One of the things I love to do in webinars is pull up a bank's marketing page and the Square marketing page. And it's that stark difference. You go through the bank's webpage and you clearly see, we're talking banker to you, and like that thing I was talking earlier about transactional. You pull up Square's website and literally in the middle of it is a beautiful, gorgeous picture of a business owner. And the messaging is literally around their face. And like what that tells you is, this is about you, business owner. Like you're literally at the center of our experience. When you go through their menu items, it speaks to the outcomes that the business owner is looking for. I need to pay my people. I need to prepare for the future. I need to move money, right? And so it's all built around them. So here's an interesting take though. So Square's done this really great job of attracting business owners, solving a problem, helping them get paid, basically move to this digital commerce world. The interesting thing is a lot of that activity is taking place inside of consumer accounts in banking today. We've looked at the data, we've analyzed it, we've gone back to financial institutions. We were looking at a financial institution's data the other day. They had 82,000 Square users inside of their organization.
Wow.
Doing
not Cash App, Square users.
Square, doing $2.3 billion of deposits, okay? Of the 82,000, only 30,000 are in business bank accounts. 50,000 of those are in consumer, okay? So that same organization and others, when we go talk to them about turning on integrated invoicing and in-app payment acceptance to consumer accounts, will say, well, we have BSA issues with that. If they're conducting business transactions in the account, we need to analyze them different. We need to think about them differently. My retort back to the rest of the industry now is, are we going to hold Square to that same standard, or QuickBooks or Stripe?
Well,
As an industry, are we not supposed to, or if you're kind of holding up your fiduciary responsibility and your compliance, at what point do you go to those account holders and say, okay, you either need to disconnect Square from your consumer account, or you need to move to a business account because we are out of compliance? I think that's a really interesting thing that we need to wrestle with.
I want to call BS on the BSA argument that the banks come back with, right? Like, yes, there was regulation put down on the books. There are approaches to solve this that we can go after, and the bank, if they're willing to step outside of the box of, but this is the way we've always done it, they can go begin to solve that. It's frankly lazy in my mind.
I agree, Jason, but those are the types of things that they put up as barrier, almost to say, we don't want to take on that challenge, right?
Yes.
But yet somebody else is coming in and, like taking advantage, basically, of your lack of proactiveness.
Kind of going back, just sort of selfishly for a moment to niche, right? That's some of the other kind of pushback is, well, if we focus narrowly, that ruins our profitability. We can't possibly do that. We can't segment small business even smaller, right? And I think it's and sometimes compliance is there, but sometimes the other piece is just the fear of focus and the fear of focusing narrowly on the customer, because that's a very fluid way to do it, as opposed to seeing them as an account holder. So
I love that you brought up fear. It takes courage to do simplicity. Mm-hmm. And it takes courage to say no to things. If you look at a bank, regardless of size, they're offering the same breadth of products. When we talk to these banks, it's like, but who's your core customer and who'd you focus on? Right. And they're afraid of leaving somebody out. And so they think that by, casting, more rocks, they're more likely to, hit the customer. And the reality is they're hitting nothing when they're doing that, because they're afraid to focus.
When there's nothing wrong with casting a wide net, but nothing wrong with general purpose banking. Derik and I have talked about this, but you still need to look in the net and see what you caught. And in addition to being a great general banking partner, you can also be an excellent partner with the different types of fish that you caught, the different types of niches. It's a both and. They don't cannibalize each other. And it's a long way around to the Square example. Your customers are using consumer type tools. It does not cannibalize your business to have a niche. It does not cannibalize your business to introduce those tools in, because they're already doing it somewhere else. So I think that fear hopefully will be replaced by courage. Certainly after everyone listens to this podcast, I think it'll be a national movement.
Well, Derik, I think this conversation is going to continue at an event that you're hosting soon. Can you share a little bit more about, what's going to be happening and who should be attending?
Yeah. So, I love these kind of conversations. I have these with friends like Allison, Jason, we caught up at FinTech DevCon last week, had the same conversation. And so what we decided to do at Autobooks is really not put together an Autobooks event, but more or less a small business event. And so just try to bring together who I think are people that have a very informed and well-educated and thoughtful positions on the topic of small business banking, both a group of people that are running companies, industry speakers, and bankers, to say, I think the small business banking conversation needs to be moved forward. And so we basically started a group called smbankingforward.com. It's an event. It's a virtual event, October 5th and 6th. It's 2 half days, and the whole conversation is going to be around the topic of small business banking. And I want people to come and hear, from Ron Shevlin talking about this macro environment that we talked about, but also then hear from Allison and, digital bank owners like Corey LeBlanc at Locality and Melissa Eggleston at NBKC, and hear from people that are actually not just talking about how to move small business forward, but are doing something about it as well. So I want you to walk away from this virtual event saying, all right, I'm understanding how small business banking is being redefined. I have a better understanding about maybe what it takes to attract business owners. But then in the second half of the event, what do I do with that? How do I then activate those relationships and grow them long term? in full transparency, we want this to be an event that takes legs from here moving forward, maybe has in-person regional events next year. We want to build a community of people that really care about small business banking and want to move it forward in general. So would love to have anyone and everyone attend October 5th and 6th.
Fantastic. I mean, you've got a good lineup. I feel honored to attend. I feel like I'm maybe the weakest link in your lineup. So I'm going to go get my small business game on to bring some thought provoking. But when we think about the importance of this conversation, the level of innovation that this group deserves and is underserved, it is the lifeblood of our economy. It is the lifeblood for many of a family, that small business is that sole source of income. And an emerging class of people who are dependent on the side hustle, right? They never intended to become a small business owner, but now in the state of the economy or their financial lives, they are, because they've got a side hustle attached to it. And I know that's one of the niches that Allison's pretty passionate about as well.
Yeah, very. And I think that's kind of the side hustle becoming the hustle, and going back to Derik and language. I mean, by 2027, 50% of the workforce will be gig workers or independent workers, whatever term you'd like to use. So it's not a side thing anymore in terms of the market that you can address. And the exciting thing is there are many niches within the niche that banks and credit unions can look at. So I think that's the exciting next frontier for sure.
Fantastic. And what a great way to end. As we go into break, more information on how you can be attending this exciting event. And after the break, JP, Brett, and I, in a rare moment that we were all able to get on together, talk about how the world has changed in a post 9/11 world and the ever exciting topic of KYC and AML.
Welcome back to Breaking Banks. It's a rare day here. We actually have all three hosts together in our virtual studios.
Yeah, it's been a while.
Yeah, it's good to see and hear both of you at the same time instead of just recorded. Jason, super interesting segment with Autobooks. And I think that dovetails nicely into what we're going to talk about here in the second half. We're spending a little bit of time looking back as we look forward. We're recording this just on the heels of the 20th anniversary of 9/11. And when you think about some of the things how that changed the world in a very big way, not the least of which is the Patriot Act in the banking segment. I want to talk a little bit about what were some of the groundswell moments over the past 20 years that brought us to where we are today, and what does this look like over the next 20 years. But first of all, Brett, 9/11, 2001, were you living in New York then?
I was not, JP. I was actually in Hong Kong. I think most people are familiar with the show and have listened to me know I spent some time in Hong Kong, a number of years. But I do remember it clearly. It's certainly one of those moments like, where were you when JFK was shot? I remember having the TV on and just watching with such great trepidation and, the obviously, the first impact, and seeing that unfolding, but then watching live as the second plane hit, it was just such a surreal moment. I was on the phone with a friend of mine. Actually, he was a co-worker, a VP of operations for Motor Media at the time. He was in New York, and he quite, prophetically, predicted that this would have, significant changes in terms of our business and the whole .com phenomenon at the time and otherwise. And turned out he was right. It's not just lived in our memories institutionally and otherwise, but it obviously has resulted in significant changes in simple things like how we move around and travel and so forth. So, I then visited New York just a couple of months later in November for a, related to the business that I was working with at the time. And then I ended up trying to get down to see a shuttle launch in Cape Canaveral, and the security, for that was just incredible, so I certainly do remember the event.
Yeah. Jason, where were you?
I was in Boston, and I had actually taken flight 175 to LA the week before. Right. So
Wow.
I was a venture capitalist at the time, and our headquarters was in New York and in Midtown. And a bunch of, the people, at the time did the Hamptons house, thing, were traders and worked down in and around, that area. And so it was interesting, one, the realization of like, ooh, off by a week, sort of thing. But it also began to evolve some of the investment themes that I was looking at. So fintech was not a big space, but I'd come out of, financial services. That's what I focused on while I was at Monitor. And like, you do what you know. In my case, it was things that sell into FIs. And it was one of the things, the central theses on why I invested in Memento, which was eventually acquired by FIS. And what Memento did was it took unstructured data, and I called it like it Googleified internal data. But one of the use cases was looking for clusters and patterns that you normally couldn't identify. And AML was one of those key things, as was KYC. And so like use cases were both fraud and AML related to that. We looked at a bunch of other things. It was just kind of interesting. I had 4 term sheets out September 10th and ended up executing on none of them by September 12th. And, just like talk about those things that change the world in terms of like in an instant, the amount of kind of change that happens in the environment.
Well,
Priorities certainly change, right? What's important and what's critical to get done, it obviously changed.
Yeah, and I think also a massive increase in complexity. I was listening to a podcast the other day talking about the Cold War and how frightening it was to as young kids back in the day, being told to duck and cover and be prepared for a nuclear attack. But pretty much we were pretty sure it was going to be the Russians, right? If it came at all. And the world seemingly, maybe not so black and white in retrospect, but seemingly kind of clear about, where the lines were drawn. And 9/11 and the aftermath really began to create a whole lot more complexity. And one of the ways that the industry wanted to address that, or at least the government wanted the industry to address that, was the Patriot Act. It came into law 45 days after 9/11. I mean, really rushed through Congress. Only one senator voted against it. I kind of forgot about this, but you guys may or may not know or recall, this is actually an acronym. Do you guys know what Patriot Act stands for?
No idea.
It's the USA Patriot Act. And you might think USA is the United States of America, but it's actually the Uniting and Strengthening America by providing appropriate tools required to intercept and obstruct terrorism. Act of 2001.
When government makes acronyms, yes.
Well, I don't know who's worse, government or bankers, but
I don't know. I want to know how long they spent on the acronym versus the actual act, because it's really had some loopholes, but sounds good.
Exactly. Well, and in our time today, I don't want to debate all the pros and cons of the Patriot Act, but let's just accept as fact that it certainly made bankers' lives a lot more complex. And this comes at a time where new technologies were emerging, and very interesting, Jason. I didn't realize the timeline tie to Memento in this, as you were saying that. There were just a lot of impacts.
Well, one of the things is obviously this, whole terrorist financing AML thing. The compliance costs of banks have gone up considerably as a result of this. Now, in no small part because of what happened at 9/11. But if we look at the effectiveness of the Patriot Act at stopping money laundering or stopping terrorist financing, it's been woefully inadequate. But it has increased compliance costs significantly. It's increased financial inclusion because now you have heavier identity requirements that people can't meet. And so, from a financial services perspective, I'd say, Patriot Act has been a net negative in terms of friction to customers and, efficiency and IT costs and so forth. We certainly need a new paradigm moving forward. I get what the Patriot Act was trying to achieve achieve. But the reality is we stop about 1% of money laundering today with all of this massive compliance infrastructure that we have. It's just not working the way we intended it to. So if there's one lesson we've learned out of this, that, while knee-jerk reactions for a major event like 9/11 are expected, that, we also need to have these regular review points afterwards saying, is this really working? And is this something that we should look to revise or reform?
Well, and so this is part of, one of my early impressions was a class I took with Stephen Jay Gould on evolutionary biology. And trust me, I will tie this back to the regulatory frameworks. But he wrote this fundamental paper that evolution is not this linear thing that, we think of, well, most of us think of, where, the small single cell, organisms in the ocean, crawling onto land, going, into, standing upright like monkeys to the human piece. But it's actually, there's this punctuated equilibrium. And I'd point to, 9/11 was a period of punctuated equilibrium, right? Where the world just changed fundamentally in the same way that, when giant asteroids hit the earth and the world was fundamentally different and the dinosaurs went away. I'd say COVID is also, there have been a lot of evolutionary seeds planted along the way, but now COVID happens that just kind of the balloon has burst.
No, absolutely. I think if you look at the impact of this in terms of identity infrastructure alone, the COVID passport and all of the sort of stuff that we're going to have, obviously this was probably going to happen at some point anyway, because as you digitize the services layer for medical, education, healthcare, finance, et cetera, if you're accessing these services digitally, you need a robust digital identity infrastructure. But this is really starting to make us think about what is important in terms of that identity infrastructure to make sure that we protect citizens, that, we're safe doing stuff. It's certainly going to probably accelerate the need for that, I think.
Yeah. And on the regulatory front, this is where the challenge is. In the best of days, regulators don't keep up and regulation does not keep up with that slow incremental grind, and it is not at all situated to deal with punctuated equilibrium. And I think, we're about to see another puncture in how the banking world operates as we move towards embedded finance, where we don't even realize who we're conducting financial transactions with. And Brett, I think you hit one of the most important keys to this, which is we can't just put things on the books and then not revisit their effectiveness. That the regulation itself needs to be evolutionary, and maybe even some of it needs to have its own punctuated equilibrium. Others is probably sufficient to do the test and learn. So I think, JP, you've heard me describe this. I call it the monumental approach to regulation, which is wait for something bad to happen. It's normally really bad before you're going to build a monument to it. Then you spend a lot of time arguing over what the components of the monument are, and lots of stakeholders. None of them end up necessarily well served. And at the end of it, after you've built this monumental thing, well, it's only the pigeons that make a deposit going forward. And I think that's a lot of what we've got on the books right now, is things that didn't serve any segment all that well, ended up watered down, and haven't been revisited in far too long.
Well, and the thing that goes along with that is something else Brett mentioned, which is friction, right? That this was monumental in adding a lot more friction to the everyday banking, right, for the customers, both businesses and consumers. And I may have talked about this on the show before, but I still remember my first bank meeting ever. I came from another industry in the late 80s. When I first joined the banking industry, the senior vice president that hired me said, "Hey, what did you think of our first meeting?" I said, "Well, do you want me to be honest?" He said, "Yes." I said, "Well, I'm used to working in an industry where the number one goal was making sure we were taking care of customers. And then we figured out to make sure we were following rules and regulations along the way. And what I kind of heard here was, hey, let's follow some regulations. And if we take care of the customers, well, that's okay too." Byproduct. Yeah. A happy byproduct, but still a byproduct. And, that just became kind of on steroids after the Patriot Act, where, sir, you need to understand, we have to verify your identity and we have to do all of this. And that would be one thing if it were, tremendously effective. But as you both pointed out, not so much.
When we look at, the sort of friction element around customers, to Jason's point earlier, the need to revisit regulation and tweak it, because of the technological changes that we're experiencing now, is heightened, obviously. But you have, the more regulated a jurisdiction is, like in the United States, you have these laws on the books, such as the Community Reinvestment Act, which I've talked about on this show a few times, right? Where it was assumed that financial inclusion at its most effective in 1977 was done through bank branches. Now we know that technology can do financial inclusion far better. We've seen that, across the developing world. But when is the right point to come back and reform those earlier regulations where you made those mistakes, which added a ton of friction to the customer experience? What we tend to do instead is just put more regulations on top that add increasingly to the friction, rather than revisiting stuff that we've done in the past. There has been debate on CRA reform for at least 6 or 7 years that I'm aware of, and it's not moving meaningfully in the United States. But if you look at AML, the FATF rules and things like that, the Patriot Act, the CIP requirements, things like that, when is it that we're going to revisit this? I was reminded of this recently because I was doing this thing for FIS, a hackathon with some university students. And one of the university students looked at helping homeless people getting a bank account. And, if you think about it, the obvious thing you might think of is, well, they don't have a mobile phone, right? Or they don't have a phone number, but they don't have an address, and they may not have an identity document. And so how is someone like that going to get access to basic banking in the regulatory environment that we've created right now? We have to either create identity infrastructure that's easily accessible and available, or we have to really rethink the way we gatekeep access to financial services. But it's got to start with legal reform, regulatory reform, and it just there doesn't seem to be the urgency for that. I know we're off on tangent a bit, but
I want to talk about regulation and the way we approach it, because there's a couple ways that we can begin to unpack it. If we think about different ways like co-regulation and self-regulation, and brings up the concept, of course, of continuous regulation, because part of what technology has enabled that we should be able to do, and both sides seem to fight it, that that you'll hear the progressive saying, oh, if it's co-regulation, now industry's in bed with the regulators and what they're meant to protect. And on the flip side of that, you have industry itself fighting it, going, I don't like the idea of continuous regulation, even though, like, not only can it create more opportunities for inclusion, like you said, Brett, it also keeps you from ending up so far off the track that it ends up being an issue, right? Like this idea of, hey, we could be technically integrated, in data exchange and see in real time. And so before it becomes a massive issue, a la Wells, in terms of what you're doing, because we do it in batch, or, some of what turned out to be discriminatory policies that I think it was Ally Bank got hit for on the auto lending. Those things could have been seen much more, rapidly through better data and better integration, yet neither side really wants that.
Well, you've hit on a number of important topics, and you've talked about, Jason, you introduced punctuated equilibrium. And so we've agreed that, 9/11 and then the Patriot Act specifically to the industry was one of those. We have things like the appearance of blockchain and Bitcoin, certainly the global financial crisis, the rise of mobility and broadband and smartphones. Those were all pretty important, lurches forward in technology that impacted anybody around finance. What do you think is the next one, or are we in it right now in the COVID world?
So COVID's definitely one of those, and we're going to have, other pandemics most likely over the next 20 to 30 years generated by climate change, with the melting of glaciers that release primordial viruses and so forth. But the other two that I talk about in the new book, Technosocialism, sorry for the plug, is climate change, which is a fairly obvious one, right? And so we're already starting to see that with ESG initiatives and more focus on sustainability, renewability, the protests we see against HSBC and Barclays in the UK right now because their support for fossil fuel industries, that's all part of, that moment. But the other one that's obvious is, large scale automation in society. Right. And how that will change the way we work, the way we think about, assets and so forth. That's going to be the introduction of high level automation in society is just going to be such a significant, philosophical change for humanity. Because in certainly in the last 200 years since the Industrial Revolution, work and its role in society has been significantly emphasized. But if you don't need to work as much as a result of automation, then it changes everything. I think so. They're the big ones that I talk about, but the other one that that sort of ties in with what we've been talking about, certainly since 9/11, one of the other things that has emerged as a real problem societally is inequality. And so inequality contributes to this long-term concern about or long-term economic uncertainty. And so if you look at some of the side effects since what's happened since 9/11 compared with pre-9/11, we have a lot more protests going on around the world. A lot more people vocally participating in sort of these, policy governance, type conversations. And so you have a 200% increase in the number of protests that we've had in the last 20 years, but you have 1,000% increase in participation. That spells the fact that a lot more people are concerned about the future and have a lot more uncertainty about the future. So 9/11, I think, obviously contributed a great deal to that, because it sort of it created this upheaval of this social norm and what we could expect in terms of our personal safety and things like that. It certainly, did have a pretty interesting side effect in that respect.
Well, Bright, you kept stealing a lot of the points I wanted to make. I thought you were going to kind of leave it and let me pick up the climate change one. When the U.S. Military says the number one threat to global stability now is climate change, like the have and the have-nots around, land that can be farmed and access to water. I think that also then points to, hey, we're now entering an era of digital have and have-nots, that when we get to going to reap the benefits of this automation and intelligence, are we going to see that we have and have-nots? And we know that the greater that tension becomes and the tighter that string is pulled, it does snap. We've seen several of those revolutions in the past, but the wars and how it reconciles in the future, I think, is going to be the most interesting aspect when we look at things like, what is DeFi going to do, and can AI be used to generate viruses? Because the next wars and revolutions are going to be fought online.
Also, I think the other element to that is, the increasing dominance of China economically and from a trade perspective. I'm extremely concerned how, the US geopolitically will respond to that, because I don't think right now, foundationally, the US economy has the right building blocks to compete with the Chinese economy in the 21st century. And so, when that does happen, what is going to be the response of the US to that? I don't want to get into the big geopolitics, but politics in detail on that. But that concerns me, is how do we deal with that change? If you look back thousands of years ago, China was a dominant economy. So it was India, massive world powers with incredible technological advancements. And so China sees it as them just returning to this position of economic dominance, where the US sees it as a threat to their economic dominance. So I don't know. Well, that's another one.
Well, you've both brought up some pretty big themes. So let's close with this. I ask each of you, maybe Jason first. So what advice do you have for leaders then giving this potential for a continued massive sea change here? And I'd say two levels. One is entrepreneurs, and the other is for especially those in the incumbents, right? That feel the waves of change hitting their infrastructure really hard here. So which should we focus on?
I think I can combine both, because I think how they'll apply it is different, but it's the same point, which is don't fight the last war. And I would point to the number of fintechs that, even though they're innovators and have raised lots of money, they're fighting the last war. That if I see, yet another challenger bank that is, we're the bank of X for Y, but it's not an actionable segmentation that delivers something that is actually differentiated, like there's way too many of those. And I would say the same is true if you are an incumbent. Don't rest too much on your laurels because you think your walls are tall enough and thick enough and there's moats around and all of this is going to go back to the way it was. It's not. It's going to look fundamentally different, and that requires different strategies, different approaches. And, one of those is, if you're worried about going all in on a strategy, you might want to start testing it and developing, this idea of nimbleness within your organization structurally, in decision-making and strategically now, because, the last thing you want to do is pull out, an Apple or an IBM where they had to pull the Hail Mary, not once, but, for both of them twice. Whereas there was a sea change, punctuated equilibrium in terms of what was going on, right? The mainframe goes away and let's throw the Hail Mary. We land on services, worked out well, right up until there was another sea change, in the SaaS world, right? And so I'd say that idea of not fighting the last battle strategically, or even like the forces you're building, is absolutely critical.
Now Jason's stealing my thunder. But no, I think don't get married to any of your sacred cows or any of your previous strategies, because the one thing that is going to characterize the 21st century is continuous upheaval, continuous disruption, accelerated rate of change. So if you're married to a strategy, you're just not going to be able to adapt. So in line with what Jason said, your organizations need to be adaptive and learning organizations. If you can emphasize one skill for individuals, it's the ability to learn new skills and adapt. That's really going to be critical for the 21st century because of change. And particularly because almost every industry that we're talking about as a result of the introduction of AI and automation is going to go through incredible shifts, incredible changes. Look at the energy industry right now. Like we always talk about fintech, but you've got renewable generation at a fraction of the cost, 1/8 of the cost of generating a kilowatt of energy via coal. It's an unsustainable industry, but we have to retool that entire sector, not just because it's going to be cheaper to deal with renewables, but also because we have to make this infrastructure climate resilient, right? So that's a massive employment opportunity there, but it requires energy companies to completely rethink their business models. We now have to have storage, battery storage capabilities, grid level batteries and things like that. Again, going off on a tangent, but adaptability is the number one skill in the 21st century.
Well, in the interest of time, I think we'll leave it there, but I think you both give good advice. As much as we like to think about the future and try to even predict the future, I'm always reminded of the great quote by Alan Kay, right? The best way to predict the future is to build it. Yep. Yeah, that's exactly right.
Amen. That's it for us this week. We'll be back next week with more Breaking Banks. That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform.
or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.